This is Stephanie Murphy for Let's Talk Bitcoin. I'm here today talking with Jonathan Terrell.
Hi there.
Hey, Jonathan.
Hello.
Welcome to Let's Talk Bitcoin. You've got a company called Lair, and you're working on a decentralized cryptocurrency exchange, not just for Bitcoin, but for some other cryptocurrencies and fiat. Can you tell me about that?
Yeah, it's coin agnostic. So any coin that uses a blockchain-like data structure, we're ultimately hoping we can support them, will be able to be transacted on the exchange. It's a two-stage development. At this stage, we're looking at the crypto-to-crypto side of things, so you'll be able to exchange cryptocurrencies cross-blockchain, and the latest development of it is going to be aimed at a decentralized part of the system whereby you can get fiat onto it via an open interface. So anyone can sign up as a reseller or an escrow, and then enact Bitcoin transactions for fiat or any other cryptocurrency for fiat on the decentralized exchange.
Okay, and you are based out of Brighton, UK, but it sounds like what you're talking about with Lair, this is going to be a global thing?
Absolutely. I mean, once the exchange is launched, we're not in charge. I mean, in the way that Satoshi is not in charge of Bitcoin itself. We've got offices here at the university with which we're loosely affiliated. But once it's actually launched as a product, it will be totally open source and it will be its own entity that sits on the internet. So much so that in the distant future, when new cryptocurrencies are launched, we don't have a say in which ones get selected on there. There will be a proof of work mechanism whereby those are added to the Lair exchange itself, or indeed selected off if currencies become unused or become very quiet over a long period of time.
How do you accomplish a totally decentralized exchange where there's nobody even in charge deciding what kinds of things are exchanged on the exchange?
The exchange itself deals with cryptocurrency or fiat. There's a proof of work mechanism whereby new currencies, whether they be cryptographic or fiat, are added to the exchange. When it launches, it will be seeded with, I'm picking some coins here, Litecoin, Bitcoin, the most popular ones, and US dollars, GBP, euros, things like that.
What is the proof of work?
Say I've launched a new coin, Jonathan coin, and I want to get it on the exchange. I would have to pay in a currency that's specific to that exchange to have it added onto the exchange. And then once payments have reached a certain amount, that's then added onto the exchange and it's selected onto it. And like I said, if it becomes that the volume of that currency that's being transacted is low, it will be selected off of the exchange in the distant future.
Oh.
So there needs to be a cost to prevent that, to prevent people adding. For example, if I wanted to DDoS the system, I could just put hundreds of spurious requests onto the network and say, oh, I'm going to add 1,000 different coins now, and it would completely attack the system basically and bring it to a halt. So it's a way of mitigating Sybil and DOS attacks that can be launched against the system. We've been very careful about making sure the way it's designed that there is a cost in doing everything. A bid ask has a cost. Transactions have a cost. Adding a new currency, if you want to get your currency elected on there, has a cost. Indeed, in fact, logging on as an escrow to transact fiat has a cost. So we've been very careful about making sure that the network itself is set up correctly using proof of work so that there aren't the ability to Sybil attack it basically or DOS it.
Would the costs for different operations on the exchange, such as adding a currency pair or logging on or creating a bid ask, are those determined by a market mechanism?
We haven't decided at this stage, but it will probably be a float. So it will be based on the volumes being transacted, because you're paying in effectively a currency to enact things on that blockchain. So it will be a percentage share of that currency that's currently in circulation.
Is there going to be somebody deciding that? Basically, there's not going to be a group of central planners.
It will be an algorithm that decides it, in the way that the blockchain, the Bitcoin network itself adjusts its difficulty.
Right.
The Lair exchange will decide what the cost of adding a coin at any particular point in time is.
Give me a picture of how you see this working. You said in the beginning that this could allow basically merchants and different points in the physical world to... Yeah,
I've probably started in slightly the wrong place with this, but I think the best point to start would be to get an understanding of how one would transact cross-blockchain. At the moment, I don't know if you know what a double spending attack is.
Yes.
So I would put a spurious transaction that I don't intend to onto the network. I would secretly mine on a separate network with more hashing. What this network does is it looks at a transaction that's gone on to, when two users meet who want to enact a bid ask to say I'm swapping Litecoin for Bitcoin, we would agree a certain number of confirmations that were going to take place. The network then locks each transaction into an M of N transaction. So you and I can agree that gets locked away. The network acts as the escrow in that instant, and it watches to see how many transactions we've agreed on. Say it's 20 for Bitcoin, 40 for Litecoin. When those confirmations have been met, it then releases the funds to each party. If a double spending attack occurs, it refunds them to each party. So it can reverse. Obviously, you're not reversing on the blockchain, but you are refunding that balance back to the individual. Yeah, it's a secure way of proofing against double spending, and enacting a transaction crypto to crypto cross-blockchain. There's actually a couple of other ways we've come up with doing this, but they're a bit complicated and I don't want to go into them. So effectively, that's the first mechanism. It lets you transact crypto for crypto.
With that multi-signature transaction feature, most exchanges right now that are centralized do this, but they don't do it in the same way that you do it, right? Like with yours, it's pretty much built in to the...
Yeah, there's effectively you could almost call it an agent or an algorithm that's running on the network that does that. So in that, say, Gox or someone like that holds your funds and has the promissory that they will pay you Bitcoin or dollars when you come to withdraw. That doesn't happen in this instance because your coins are held on the blockchain and they're released. No one is holding your coins. They're locked on the network. You can't lose your coins. And in fact, worst case, if there was, say, a nuclear war or something like that in the middle of doing a transaction, because it's M of N, you can actually find the party you're transacting with and recover your coins at a later point, even if the network itself goes down. So it's quite a well-designed redundant system that we've got here.
Yeah, that's amazing. So I think that brings up a great point, because with centralized exchanges, there is this tendency to, say, well, we're going to basically create an interface that shows something to the customer that looks like you have this amount of Bitcoins or this amount of dollars or Litecoins in your account, but you really don't. It's really being stored kind of behind the scenes, perhaps in
Absolutely.
Perhaps in cold
It's not
storage.
transparent, and it could be even fractional reserve behind the scenes. You don't know that. So you don't know that the promissory that you're seeing on that screen is actually something you're going to get out at the end of the day.
Well, exactly. And there is, I think, a big temptation once an exchange starts to do that. It's not too far off for them to think, well, we can just do some fractional reserve stuff. With Metaelair, this is not possible. Is that right? Because
Absolutely, yeah.
everything is completely transparent. It's all happening on the blockchain, and there's no central authority to actually take any of those coins and do anything with them that nobody can see.
Exactly. You can see all the transactions that are occurring across the two blockchains that you're using, and everyone involved in that transaction can see it, so it's totally transparent.
Does Metaelair make any kind of profit off of this, or does that come from...
There's kind of altruistic element to this in that, once it's launched, that product, in fact, the design of it can't work unless it is completely open source. So, we've not shot ourselves in the foot, so to speak, but there has to be another revenue model that sits alongside that. The way we're working it at the moment, and this is very much dependent on the investor that we go to market with, is that the wallet itself is an interface to multiple balances that you may hold. So it's a multi-currency wallet. And we've also talked to a couple of other companies who've come to us when we first went in the media. Quite a few people came up to us and they said, well, we're actually looking at offering futures contracts or other financial products using alt currencies and cryptocurrencies. So what we would provide on that interface is the ability to download a module. You then get that, say, futures contract service. And by buying through us, we take a percentage cut of it. So that's the business model of it on the side. At the same time, the wallet software is totally open source, so other people can go and take it and do their own thing with it. But we're hoping that we will become a large and fairly canonical wallet for multi-cryptocurrency transactions. As a result, we'll have a large user base, and that's where the business model is.
Right. And the value I see in this is that it sounds like it's simple. Like you're doing something that a lot of other people have tried to do or said that they're going to do, but they want to do all this extra stuff on top of it too.
Well, there's an awful lot of, and this is just human motivation, everyone's launching their own cryptocurrency. They say it's a decentralized exchange, but actually all of these different exchanges are just doing colored coins locally on that blockchain, which is, again, it's linked to an asset or something like that. And also there's an element of pre-mining. Everyone sort of needs to go, well, how do I make a profit out of this? So we've been very careful about making sure that there's no pre-mining in our system. Once it's out there, we're not benefiting from the system itself, we're benefiting from the wallet that links to it.
I could imagine that there's a lot of savings in the potential security costs if you're not having a centralized exchange where you're storing people's coins somewhere or storing people's fiat somewhere. And then, of course, there's, you got to secure that against governments, which isn't always possible. If you don't have to worry about any of that because you are not actually holding anything or it's all being held on the blockchains, then that really kind of sounds like it frees up your resources to concentrate on some other things.
Absolutely. I mean, we've purposefully kept our business footprint, if you like, small. The development team that's needed to support this and the wallet once it's launched is not going to be many developers at all. In fact, I dare say we'll probably have more people involved in marketing and pushing the software out and doing the website than we will in the actual development of the software once it's up and running. It's a deliberately small footprint, and it reduces currently all kinds of issues around legislation, holding funds, etc. And all of that is then down to the responsibility of individuals using their wallet. So it keeps the business itself quite streamlined.
just a multi-currency wallet by itself is a really cool thing. Would this be like a web interface, or would it be something that somebody could actually download to like a computer?
I mean, at this stage, the wallet is there are many ways we can cut it. There could potentially be a web interface, but again, you'd be looking at a central party who'd be hosting that, which may be us. There's certainly going to be a software client. Depending again on the kind of investor we go with, we're looking at it for Android, tablets, laptops, desktops, things like that. I mean, one of the things that we're very keen on as well is hardware wallets. I think ultimately you can't get true security on wallets per se until they shift to the hardware level. But that's sort of a few steps away from us. First of all, we need to actually get the exchange up and running, and then we'll look at moving to possibly even partnering with some kind of hardware wallet provider.
So you're thinking really big there.
Well, that's further off. Right now, we're concentrating on the crypto to crypto side of things, the crypto to fiat, and also the wallet side of things as well, which we have de-risked in the last year.
To make a multi-currency wallet, that's something that hasn't been done before on a software level. There have been, sort of web interfaces, but it's really not what you're talking about, which is something where you actually have full control over all those wallets with different cryptocurrencies that are included in there. How do you even begin to code something like that that's adaptable and can add and drop different cryptocurrencies based on these market mechanisms of whether people add them or take them away from the exchange?
This is why we need to be very careful about what currencies get added to the exchange. Like I say, when it launches, it will be seeded with certain currencies. And again, this is the part of it, the specifics of how the software wallet will actually work, a work in progress. But we believe at this stage it's going to be a module you would download per currency, for example. So your wallet is basically as large as it needs to be to support a relevant currency. And then there's also certain ways to keep the actual blockchain data size that you need to store locally reduced. So we're looking at that as well. But like I say, I think the majority of these are reasonably well-solved problems at this stage. It's more the exchange side of things that we're focusing on.
Does the Bitcoin blockchain or the Litecoin blockchain need to be pruned before this can be accomplished, or do you think you could do it at this stage?
I don't know, but I know it's a solved problem. But in terms of how we would address that locally on a wallet, there's a number of ways to do that.
It sounds like there's some pretty serious coding going on in this. I mean,
yes. In fact, it seems tautological, but the cross-blockchain exchange stuff was fairly difficult. A proof-of-work mechanism for selecting which cryptocurrencies are brought onto the exchange was reasonably straightforward. The hardest part is actually not coming up with a bid-ask mechanism whereby users can't maliciously spam the network with bid asks they have no intention of completing. And again, we've come up with a solution to that.
So as far as getting fiat into this decentralized exchange, can you kind of paint a picture of how you think that might work?
Yeah, so the second part of the exchange is the fiat-to-fiat side. I think I've covered enough. But in terms of a fiat to crypto side of it, there would be an open interface whereby users can sign up. There will be a cost entailed in that, which we haven't quite finalised. Again, paid for through proof of work. Once they're on there, they would receive a rating, a bit like an eBay seller rating, and there's going to be a web of trust system in there as well. So you would be able to use recommended escrow with a rating to handle your fiat when you're exchanging on the exchange itself. Because as everyone knows, you can transact Bitcoin raising on the blockchain, doesn't involve a third party, but whenever you're touching fiat, you have to go via an escrow.
I know the escrow is mediated by the decentralized exchange itself, but what about the data that tells people who is trustworthy, who's a trustworthy seller or whatever? Is there some way to incorporate that into the blockchain? So
there may be information that people can provide about themselves, but as you know, in the world currently, there is no cryptographic proof to show that somebody's scan of a passport is genuinely that scan of a passport.
Right.
The way that this mechanism actually works is there's a cost in signing up as an account, and then the account becomes more valuable the more transactions you've enacted on it. So nobody would want to spuriously go and damage an account based on the costs that they do into getting that account to the status that it's in. So basically, you'll end up with a system where people in their bedroom in India to large, well-known, household trusted names will be signing up and acting as an escrow service, and then you take your pick of those based on their current rating that they've got on the network.
Does this effectively mediate fiat to fiat exchanges as well? Like if somebody wanted to, let's say I'm in
that we're not supporting.
That you're not supporting.
We're not supporting that, no. We may, but at this stage it's not on our development path. So
what's to stop somebody if I'm in Argentina and I've got some pesos that I want to exchange into dollars? If I go to a merchant and I buy some Bitcoins and then I immediately sell those Bitcoins for dollars,
yes. Yes. So you could do that indirectly, but sorry, I should be more specific. The exchange itself won't support a fiat-to-fiat transaction, but in a two-step stage, you could indirectly go fiat to fiat. Yes, you can definitely do that.
How close is this to launching? When do you think that some of the functionality might be?
At this stage, we're talking to investors. We are talking to some who I won't name because we're actually under non-disclosure, but if we get the right investors on board, it could be very big for us in terms of it's a good matching of a relationship between two parties. Most of the entire development is de-risked at this stage. We've got modules that work. We're ready to produce an alpha cut, which I reckon is probably 3 to 6 months work, something like that, depending on the development team we get on board. But we are bottlenecked by investors. As ever, I don't know if anyone's gone down the path of investment. It can slow things down just talking with investors. We were hoping to go the donations route, but it's not been, the donations weren't as strong as we'd hoped they'd be. So we're very much relying on investors and our partnerships with other companies at this stage.
Can you say any of the other companies that you're partnered with, or?
So we're not actually partnered with anyone specifically yet, but we are in negotiations with a couple of entities who could be very interesting if they come on board.
And are you looking for people to join your team or development team, or?
Absolutely, yeah. We're looking for developers, particularly people who are strong in cryptography and who actually understand Bitcoin's Merkle trees, proof of work, things like that, to quite a high level. If anyone's out there who's interested, please do contact us. And as ever, we're looking for investors and donations as well.
So I'm just kind of thinking about all the implications of the first decentralized exchange, because to me it seems like you could potentially be the first, because this might be happening in a couple of months. You know, if you get the investors.
If things go right, it could definitely be happening. An alpha and possibly even a beta could be out this year if things move as smoothly as I hope that they will.
If there's a decentralized exchange going on, how does aggregate price data come out of that? I think we could see pretty easily what crypto to crypto trading, what prices were coming in for that. But what about fiat to crypto trading?
So the way the data structures are stored in the system is it's ratios of what currencies were exchanged to what per, and then they're blocked off in units of time. There are direct relationships between, say I swap Bitcoins for dollars. I know in a transaction that actually happened, that many Bitcoins were swapped for that many dollars. And if that forms, say, two sides of a triangle, Bitcoin and Litecoin and Bitcoin and dollars, you can then infer a cost between Litecoin and dollars. So the exchange logs information of exchanges that have actually happened, and also it can then infer secondary information of exchanges that have happened. So there's several ways to pull information out of this decentralized system to get an idea of how price is varying with time.
This data could be really interesting because with a decentralized exchange, I think anybody who's looked at Bitcoin prices over the lifetime of Bitcoin has noticed that with different exchanges, the exchange rates with fiat are actually different because there's a difficulty and a cost of getting fiat money in or out of the exchange. And there's a difficulty or a cost of using the exchange. And so the prices actually end up different. And so I think, you know, if there was a decentralized exchange that was actually truly decentralized, maybe we'd see a little bit more truth in the data that tells us.
I mean, $1 on Gox is worth less than $1 on Bitstamp, and we all know why that is because of the withdrawal times.
Exactly.
So yeah, absolutely, you're right. There's a discrepancy between it, and the Bitcoin community can treat the Meta Lair exchange prices as another benchmark, or the benchmark. I mean, I don't know. It's just, I guess it's another exchange that's in the mix.
Yeah, exactly. Right now, we sort of have these aggregators that pull data from all the different exchanges and weight it by the volume on each exchange. But with Meta Lair, you know, that might be the gold standard in terms of price discovery because there's not those extraneous factors to worry about with centralized exchanges.
Yes, that would be a very nice thing for us to have if it did become the gold standard. So, but the key thing is here that there's no absolute pricing. It's relative to the exchanges that were made in any given instance in time, and that's what's logged to the system. Yes, absolutely. And again, that comes down to proof of work because you're only logging the transactions that have been paid for. Anyone can spuriously make up some costs, but it's only once there's been a cost entailed and the transactions actually happened and fees have been spent on doing that, which can't be got back, then that's actually logged as an actual valuation. I was just wondering if any of the fees that a user would pay to do something on the Meta Lair network, do any of those fees kind of like Bitcoin mining transaction fees? Do they go? So there are a system of miners on there that are doing something a bit like mining that is securing the network, making sure transactions happen. They're also receiving a reward on that process, and it's securing the network sort of cryptographically from a proof of work point of view. So yes, there is a process within that, and that will all become clear when we launch. But the key thing about designing this is it's got to be, from a proof of work point of view and cryptography point of view, it's got to be sound under the bonnet. It's got to be very, very simple to use on the surface. And all financial systems going back to the 1600s, if you look, they had in fact, they used to use shipping chits with the East India Company, and they were very easy to forge, but they were very convenient. selection has always favored convenience with financial systems. So we've made sure that, like Bitcoin, our exchange system, when it comes up to when people come to use it, is very simple to use. And under the bonnet, it's actually as complex as it needs to be, but it's also secure as a result of that.
Could anybody participate in contributing to the Lair network?
Oh, absolutely. I mean, we're going to have, basically, for want of a better word, we're going to have miners and stuff like that who come on the network. They can use different types of hashing algorithms, and they are going to be enforcing. There's a blockchain data structure that logs a lot of the transactions that are happening, and they'll be involved in making sure that that's kept up to date for each block that's generated and for the transaction records as they're kept on the exchange. And they will be receiving rewards for doing that.
Oh, great. Okay, that's what I wanted to know.
Yeah. I mean, that's the trying to skirt around it a bit, but that's basically the gist of how it works. And again, there'll be kind of minus, for want of a better word, on the system, people enacting things and other stuff on there that doesn't look too dissimilar to Bitcoin in some respects, but is also an exchange.
Yeah, Jonathan, I really appreciate how you're able to talk about this in a way that I can understand without a technical background. How did you get this idea, and why did you decide to do this?
My background is artificial intelligence, computer science. I run a company that does sort of high-end networking for government and institutions like that. A good friend of mine who works at the university runs another company. He in fact set up a virtual worlds company to do economics in virtual worlds. And we struck up a conversation about this December 2012. And we were looking at meta approaches to dealing with different blockchains in aggregate. And we both went away and came back and said, we both sort of met each other and were like, yeah, we both had an idea, and we talked and we realized we both had a fairly similar idea, actually. Obviously, seeded by the conversations we'd had previously. And after quite a number of technical discussions, this emerged. And it's been quite a lot of work in actual coding to check that our functional ideas to actually implement well.
Yeah.
And we've got to a stage now where we're saying, yes, this works, it has legs, we're now looking for investment and we want to implement it. So it's been the work of myself, and in fact, the chap's called Kerry Fraser Robinson, you can see him on the website. We're looking for investment at this stage. We think we've got it to a point where it's been worked through sufficiently. We've both got backgrounds in computer science that it's a robust design.
I don't doubt that you have a background in AI, but what was your motivation for it? Do you want to free the world with a decentralized exchange? Tell me about that.
I don't know. I guess I get irritated by the way governments treat their currency, and they have the issuance of fiat and things like this. In a kind of nerdy way, I've always been very interested in fractional reserve banking and other systems. In 2009, I briefly dabbled in writing a sci-fi novel, and I came up with a form of centralized currency, but it had a system of mining, and it had a system of network difficulty to adjust the rate of coin generation based on the current rate of interest in that environment at a given time. So this kind of, when I discovered Bitcoin a few years later, I was thinking, this is the idea I had, but so much better. And in fact, the time I found out about it, I took all my savings account, moved into Bitcoin, and I went around and told my friends and family about it, and they thought I was nuts. But here we are, a couple of years later.
Right, they're not saying that anymore.
I have an altruistic bent, I think, and this is very much in line with stuff I've always been interested in. So it just sort of fits naturally with me, I guess.
This is a big enough project, right? You're doing a decentralized exchange and a multi-currency wallet and combining those two. But do you have any other pie-in-the-sky ideas that could potentially be things that interface with the decentralized exchange, or like other layers that could be built on top of it?
We've got some sort of improved like two-factor authentication ideas for software wallets and things like that, but they're still, again, sort of work in progress. To be honest, I have to be quite disciplined with myself and focus on one project at a time, so this is very much has had my attention for the last couple of months, and trying to make sure I don't get distracted with other ideas.
That makes sense.
So I mean, I've been fairly strict in that respect, and I'd say this has been my main focus.
Right, and you did mention the hardware idea, and I think that's a cool idea too.
Yeah, I think we'll be working with a hardware manufacturer or supplier as and when we get to that stage, if we get to that stage, to develop a hardware wallet. Because I think one of the last security problems with Bitcoin is that all software wallets, it doesn't matter where you put them, are fundamentally insecure, and that people can just log your keystrokes and see what's going on. And I think the hardware wallet is a step change in mitigating that.
Jonathan, anything else you want to add?
At this stage, no. I mean, please everyone come check out the website. If you want to donate, do. And I'm hoping we'll have some news in the next couple of months for investment, and we'll be able to actually make an announcement when we're launching.
All right. So your website is metalair.org, metalair.org.
That's it. Yeah.
You can also follow Metalair on Twitter, which is how you and I met. Check it out. I'm very excited about your project, and I can't wait to hear an update, hopefully in a couple months. Good luck with everything, Jonathan, and thanks for chatting with me today.
Okay, Stephanie, thank you very much.
Would you like to buy Bitcoin? Cash into Coins provides the fastest, easiest, and safest way to buy Bitcoin in the United States. Simply place an order online, deposit cash at any supported bank, and relax. Cash into Coins will verify your deposit and send out your Bitcoin within 24 hours. Join tens of thousands of people who have purchased from Cash into Coins. What are you waiting for? Buy your Bitcoin today. Go to cashintocoins.com. That's cashintocoins.com.